Hello everybody, in this video I'm going to give an update on my portfolio. Right now my portfolio is worth $76,034.27. Today during the day I was down $545.92, and after hours I'm up $2,183.99. Here's my options. I'm selling Amazon $170 covered calls, Disney $110 covered calls, and LUV $30 covered calls. These all expire on the 16th of this month. As for my stocks, I've got Amazon, Disney, LUV, and SoFi. The big news today is Disney. Disney reported their earnings, and as you can see, not much happened during the day. They were only down 0.02%, so not much movement during the day. However, after hours, 5.89% increase after hours. Today they reported their earnings. The estimated was 99 cents per share, and the actual reported $1.22 per share. Now, let's read an article on Yahoo Finance. The title is Disney Beats on Earnings, Boosts Dividend as Streaming Losses Narrow. Disney, ticker symbol DIS, announced it would boost its cash dividend by 50% on Wednesday as the company reported fiscal first quarter earnings that beat expectations while streaming losses narrowed. Now, there was a time when Disney paused their dividend and people were not happy about that. But it's back and they're boosting it by 50%. That's huge. So I'm happy about that. As someone who owns a couple hundred shares of Disney, I'm really glad that on top of the money I'm getting from covered calls and things like that, I'm also getting more dividend cash. Disney reported adjusted earnings of $1.22 a share, a significant beat compared to the 99-cent analysts polled by Bloomberg had expected. The company also guided to full-year fiscal 2024 earnings of $4.60 a share, an increase of at least 20% versus 2023. Revenue came in at $23.5 billion, a slight miss compared to the $23.8 billion expected. The company announced a cash dividend of 45 cents a share, an increase of 50% versus the last dividend paid in January. The dividend will be payable on July 25th to shareholders of record at the close of business on July 8th. Well, me personally, I do plan to own it well into the future, like way past July of this year. I'm going to hold on to Disney for a long time, so I am going to be getting this dividend. The board also approved a new share repurchase program targeting $3 billion in purchases in fiscal 2024. So share repurchasing program, it's a good way for the share price to increase, assuming all other factors constant, but it's good news for shareholders because share repurchasing usually means some type of increase in the share price, from what I know. Disney has been grappling with challenges that include a declining linear TV business, slower growth in its parks business, and losses in streaming. Last year, activist investor Nelson Peltz renewed his push to shake up the board as the stock price hit multi-year lows. CEO Bob Iger has committed to various cost cuts to combat those challenges. The company said Wednesday it's on track to meet or exceed its $7.5 billion annualized savings target by the end of fiscal 2024, adding it will continue to look for further efficiency opportunities. That's good. Any business should be constantly looking at ways to make things more efficient and to save money. Well, yeah. Shares jumped as much as 8% in after-hours trading following the results. New announcements, games, contents, and sports. Disney had a lot to say on Wednesday with a slew of fresh announcements. Notably, the company said it plans to invest $1.5 billion in Fortnite maker Epic Games, with Iger calling it Disney's biggest entry ever into the world of video games. That's kind of late to the game, isn't it? Because, okay, yeah, Fortnite's big, but I feel like it's been big, so why did they not go in earlier? Not only that, but I know a few people in the video game industry who, because of all the layoffs, thinks that it's not going so well. I personally keep up with League of Legends and Riot a lot, and the way things are going in the LCS over in America, it doesn't look too good. But who knows? We'll see what happens. I do think that there's certain games that are just not making much money. They're fun to play, and they're great to play from like a player's perspective. Like, for example, it's another Riot game. It's a Legends Runeterra. It's a card game, right? And that game, it's fun to play, and it's very easy for free-to-play players to get the cards that they want. However, how does that translate into making money for the company? If you can get everything for free, then what's the point of spending money and buying anything if you can get anything for free? So it's hard to make a game that is fun and is enjoyable to play for players, but at the same time is good at making money for the company. It's a hard balance to accomplish, but I don't know. The gaming industry is a little bit tricky, because I have games I love playing, but I can't imagine how it is trying to make money off of it. Anyways, our new relationship with Epic Games will create a transformational games and entertainment universe that integrates Disney's world-class storytelling into Epic's cultural phenomenon, Fortnite, enabling consumers to play, watch, create, and shop for both digital and physical goods, Iger said on the earnings call. On the content side, the company said Disney Plus will be the exclusive streaming home for Taylor Swift: The Eras Tour, Taylor's version. The concert film will feature 5 additional acoustic songs, including Cardigan. Meanwhile, an animated Moana sequel will hit theaters in November as Disney leans deeper into sequels and franchises amid a struggling box office. And I did mention this in my previous video. I do feel like a lot of Disney superfans, they like older Disney things. And they have to really keep up with producing good new content. Hopefully this Moana sequel will be well received, but yeah, when it says struggling box office, I can tell because I watch a lot of Disney content. A lot of people complain that the MCU, for example, is not doing as well as the Infinity War saga. A lot of the later ones people don't like. Eternals, for example. A lot of people didn't like the Eternals movie. There's certain series on Disney Plus that I enjoy watching. For example, I enjoyed WandaVision. I enjoyed Loki. But it's hit or miss. This is what I'm getting from the general community. I'm inside of like Facebook groups, and I watch a lot of YouTube videos and things like that, and I look at the comments. So I can kind of see how people are feeling about Disney content, MCU content, things like that in general. And it's hit or miss. Hopefully this Moana movie, the sequel, will do well. We'll see. Disney also announced a firmer timeline for the company's over-the-top OTT ESPN streaming service, revealing the platform will launch fall 2025. ESPN noted in a post on social media the service will launch before the football season kicks off next year. The development comes after news broke Disney's ESPN will team up with Warner Bros. Discovery and Fox to launch a new sports streaming service, which is expected to debut sometime this fall. Streaming profitability in focus. Streaming losses within the entertainment division narrowed to $138 million from a loss of $984 million? Wow. In the prior year period after the company raised streaming prices. However, core Disney Plus subscribers, which excludes its India product Disney Plus Hotstar, fell sequentially by 1.3 million due to those increases. I mean, no wonder the title focused on the losses, or rather the decrease of losses from streaming, because it's narrowed. It used to be 984 million loss. Now it's only 138 million. That's a huge, I mean, good for them. Just for the record, my household has a Disney Plus subscription. And I have used it to like binge watch a lot of movies. I personally like a lot of the Marvel content on there. But yeah, the loss of subscribers in line with company guidance was slightly higher than Wall Street expected, with consensus estimates calling for a loss of about 700,000 Disney Plus core users. The company said it expects to add 5.5 million to 6 million core Disney Plus users in the second quarter. It also expects ongoing positive momentum in average revenue per user, or ARPU, after core Disney Plus ARPU increased sequentially by 14 cents compared to the fourth quarter. Including ESPN Plus, total direct-to-the-consumer losses amounted to 216 million versus the 1.05 billion reported in the year earlier period. We continue to expect to reach profitability at our combined streaming businesses in the fourth quarter of fiscal 2024, the company said. We believe this business will ultimately be a key earnings growth driver for the company. Amid recent price hikes, the company will also begin to implement crackdowns on password sharing. Disney said it likely won't see notable benefits from these initiatives until the second half of this year. Just ahead of earnings, Disney sent notices to Disney Plus users warning that it will begin to limit account sharing beginning in March. The announcement came just days after Hulu sent a similar notice to subscribers. Iger, who previously said the number of subscribers sharing accounts is significant, first revealed the company will address password sharing during its fiscal third quarter earnings call in August. As a reminder, Disney recently adjusted its reporting structure after CEO Bob Iger reorganized the company into three core business segments: Disney Entertainment, which includes its entire media and streaming portfolio; Experiences, which encompasses the parks business; and Sports, which includes ESPN Networks and ESPN Plus. Here's how those individual segments performed in the quarter versus Wall Street consensus estimates compiled by Bloomberg. The entertainment revenue, $9.98 billion versus $10.54 billion expected. Sports, $4.84 billion versus $4.62 billion expected. And Experiences, $9.13 billion versus $9.03 billion expected. Total segment operating income came in at $3.88 billion, a 27% jump compared to the year ago period. Well, let me look at this again. So parks, interesting. So it seems like the biggest earner is actually their entertainment revenue, which is the streaming part. That's interesting because I would imagine that the Experiences revenue would be the highest one, but we'll see where it goes. Then again, maybe I'm seeing things from a very biased point of view because I live right next to Disneyland. So I go to Disneyland at least once per week, and I can see in front of my eyes, from firsthand experience, how many people go, what the people are like, what the demand is like. And let's just say people go crazy for going to the parks and whatnot. Sometimes it's gotten better because it used to be that it was super hard to get any reservations to go to the theme parks. But lately, whenever I want to go, there's reservations available, so it's good. But yeah, it used to be really oh man, people were fighting over each other to get the reservations on time. Anyways, let's continue. Entertainment operating income rose above 100% year over year to hit $874 million, while the experiences division generated all-time records in revenue, operating income, and operating margin in the first quarter. Yeah, like I said, I mean, the experiences section, which deals with the parks, I've seen for myself how crazy people get about going to the Disneyland parks. The demand is high, in my opinion. That's what it looks like anyways. It's always packed when I go. The sports segment generated an operating loss of $103 million, but still saw a 37% improvement compared to the $164 million loss it reported in the year-ago period. Linear networks, meanwhile, continued to struggle. The segment fell 12% year-over-year to $2.8 billion, while operating income for linear came in at $1.2 billion, a decline of 7%. And that's it for the article. Yeah, I mean, the reason why I hold on to Disney and I want to see where it goes is because I live in an environment where so many people are crazy about Disney. To me, it just looks like the demand for Disney and Disney content is just so high. And the merchandise too. I mean, I made several videos talking about how much time I devote to buying and selling Disney products, researching on eBay and Mercari, like what are the prices and what are the trends of like Loungefly backpacks, Disney popcorn buckets. People go crazy for these. I'm in Facebook groups with people who buy and sell Disney merchandise and collectibles, dolls, snow globes. I mean, there's so many Disney branded merchandise that people go crazy for. Anyways, yeah, it looks like most of the article is focused on the streaming side of things, and like it said somewhere in the article, I forgot where it was, but how much they're losing compared to last year is a gigantic difference. So hopefully they can put out more great content on their Disney Plus streaming service, and that'll get more people to subscribe to Disney Plus. Honestly, The Mandalorian by itself, I would say, is such a good series that you should sign up for Disney Plus just to watch The Mandalorian. It surprised me by how I didn't expect a Disney Plus like a streaming series to look that good. It wowed me. The first few episodes I saw, it really impressed me with how professional and how high quality the production value looked. Yeah. But I can point out to so many, there's more niche ones where it's kind of an acquired taste. I would say WandaVision, some people said WandaVision was too slow in the beginning. I liked it. I liked the way it started out and then it built up and you could tell over time like what was happening. Anyways, I don't want to get into too many like spoilers and whatnot. But yeah, hopefully they put out more great shows for people to watch and to give people more and more reason to sign up for Disney Plus and watch the shows. Wow. But yeah, it looks like Disney is doing very well. I'm glad I own, 300 shares? Yeah. Now, for my covered call, I chose a strike price of 110. Right now it's at 105, getting very, very close. If it reaches 110, I might have to roll it out to a further date. That's already happening with Amazon. Amazon is at 171, and I chose a strike price of 170 for Amazon. It's the 7th right now, so 9 more days until expiration. We'll see where it ends up. For now, the only covered calls that I've gotten rid of are my SoFi ones. Right now, I'm not selling any SoFi covered calls. But I do plan to get back into that later. But yeah, that's how my portfolio is going. Disney had a great earnings. And they went up about 5%, 6% after. Yeah, I'm happy about that. Lately, I've just been making some good money. Year to date, so far, $2,938.81 gain for the year so far. So 2024, it was going bad in the beginning, but things are starting to turn around, it looks like. Hopefully throughout the year in 2024, I'm going to see more and more green. Let's hope. On another note, I finished filing my taxes, and I'm going to get a couple $1,000s as my refund for my tax. So I'm going to take that, probably add this to my portfolio and invest more with it. All right, that's pretty much it for this video. I hope you guys enjoyed watching. I'll see you guys next time. Bye.